Hi, I'm Jackie Keenan in Chicago Business Today, waiting for real estate recovery. The housing slump is far from over. According to projections from California-based John Burns Real Estate Consulting, Chicago area existing home sales won't fully recover until 2013. And a recovery won't mean a return to boom times. The data projects that 95,000 homes will be sold in 2013, a far cry from the 146,000 sales seen during the run-up that started in the late 90s and ran through 2005. For now, the biggest obstacle to a recovery is the job market. Unemployment is holding back demand and pushing up foreclosures. Chicago saw a 33% jump in filings last year, and there are likely more on the way, as underwater mortgages accounted for 21% of all residential mortgages in the Chicago area at the end of the third quarter. And while recent sales trends have been encouraging, they probably reflect the benefit of a homebuyer's tax credit more than a fundamental improvement.
The longer-term trend obviously has been very difficult for builders, and they ended their worst year really on record since World War II. They're not optimistic at all. I mean, you're certainly not seeing any new developments get started, and really what's happening is a lot of these developers are hanging on by their fingernails. A lot of projects are getting taken over by lenders, and lenders are trying to figure out what to do with them. And this is all part of the process that the market has to go through in terms of cleaning out this inventory we have and lowering prices, because prices still need to come down to clear the market.
And lower home prices are something owners have to get used to. Right now, home appreciation barely outpaces inflation. And all of this data is an ominous sign for the Chicago economy, which got a huge boost in jobs, wealth, and consumer spending from the housing boom.
A lot of the growth during, in the middle of the last decade in the Chicago area was tied to the housing industry, like it was in a lot of other places in the country. There are a lot of people who were capitalizing on this strong business, and obviously the industry has shrunk and it's not going to start growing in a meaningful way for a while. So, a lot of those jobs just aren't going to come back. I think the most optimistic people are saying if we could get back to where we were in the mid-90s, that would be good.
Another sign that we may have further to fall, the local home ownership rate remains near 70%, still well above historic levels. That is likely to correct as lenders make fewer mortgages because of tight credit. And many of those who do qualify for a mortgage may wait longer to buy as they come to realize that buying a home is no longer a sure path to building wealth. And that's all for this edition of Chicago Business Today. For breaking real estate news, go to chicagorealestatedaily.com and download our podcast from iTunes to see us anytime, anywhere. Thanks for watching. We'll see you tomorrow.